Mr. M.K Surana, Chairman and Managing Director of HPCL, now joins us. Mr. Surana, exactly 6 months ago, crude was going higher, rupee was going lower. Thankfully, right now, crude is going higher, but rupee is also going higher. So net-net, it's not a nightmarish scenario.
Nikun, just you have to increase the volume because I am not able to hear clearly. Can you just speak loudly?
Sure. You know, 6 months ago, closer to Diwali, crude was going higher and rupee was going lower. A complete nightmarish scenario. Currently, crude is going higher, but rupee is also strengthening. So the situation at a net level is not that bad. Is my assumption right?
That's correct, because the domestic product prices are decided based on the international product prices and the exchange rate both. So if the rupee is weaker and the product prices are higher, then that is a double impact on the domestic market prices. So a stronger rupee is good for the domestic prices.
When we also spoke to you a couple of months ago, you had a very clear view that crude will not go higher. I mean, there were international geopolitical concerns, but fundamentally on the demand side, the demand for crude was not that strong. What is your view now? Do you think, given the way how dynamics are stacked up, China is making a comeback, crude prices will remain firm and $70 to $75 could be the new normal?
The crude is very interestingly poised as of today. The factors, if we analyze a little bit, on the supply side, there is a good compliance to OPEC cut. There is a sanction looming on Iran, Venezuela. There is some internal disturbances in Libya. On the demand side, there are a bit confusing signals in the sense that the China's demand growth, it is said that it is good, but we need to yet establish it. As far as US demand is concerned, US economy is concerned, while the jobless claims have reduced, but the Q4 GDP growth estimates have been lowered by around, I think, 0.2% or so. IMF total estimate on the world economic growth is also a bit of a concern because it is being lowered. As far as OECD countries' demand is concerned, it has reduced even though there was an increase in demand from China and India. So on the demand side, we are yet to establish that whether the growth has come back or it still remains the cause of concern. As far as supply is concerned, most of the factors had been already built in, except the current Libyan unrest and the actual outlook on Iran and Venezuela's sanctions. But it also gives a little bit of levers to play around to ensure that the crude prices do not go up. I still feel that while currently the crude has crossed 71, but whether it has conclusively crossed 70, I do not think so. Maybe that in the immediate future it may see a little bit of spikes here and there, but the long-term view on crude still remains 65 to 70. One more factor is there that because the longs are not, there are not a lot of build-up in the longs on the crude, and therefore the speculators may have a capacity to build up the momentum in the bullish side that may show some spikes, but I still feel that the longer term will be 65 to 70. The US Permian Basin, if the infrastructure constraints are removed, which should happen sometime the later half of 2019, and in that case the lot more US crude may be available for export, and that may bring a sort of soberness in the crude prices. One thing we need to understand clearly that the consumer countries do not like a very high crude prices. There is a threshold at which it starts impacting. There is a threshold at which the US shale activities picks up substantially. There is a lower size on which the OPEC countries and some of the oil producing countries do have the concern. So the in-between thing is the logical and equilibrium stage, and that in my opinion is 65 to 70.
Mr. Mr. Surana, give us a sense of demand as well currently for the product, you know, at this point of time, how it's looking, even for diesel, for example. Just share with us kind of the indicators you're getting on that front.
If we see the last year, 2019-20 product demands, the growth was, MS was around 8.1%, diesel was around 2.7%, LPG was around 7.1%. If we compare it with the last year growth, that is 17-18 growth, 17-18 was a high growth period in which MS was around 10.1%, HSG was 6.6%. So on a high base, these numbers looks quite reasonable as far as the growth part is concerned. Overall, it was around 4.6% growth in all products put together in 18-20 compared to 17-18 growth of 5.3. I think it is a good growth, and it should remain at this level in future. The HSD demand, there had been some muteness because the power situation definitely seemed to have improved. The power deficit has reduced, so it reduces the demand on the diesel generator sets. Also in the passenger cars, the mix of diesel to petrol cars is reducing because the price differential between petrol to diesel has come down, and therefore to that extent there may be some impact on the diesel growth, but a growth of around 3% is a reasonable growth as far as diesel is concerned, and around 8% on MS with a overall growth of around 4.3 to 4.6%. I think there is a reasonable growth for the products.
For those who tell you that electric vehicles are coming and demand for fossil fuel is going to be taking a back seat, would you like to laugh over it?
In fact, there is a lot of talk about EVs, but there is general consensus that in country like India, there is still some time when the EVs may start impacting the demand for the fossil fuels. It may have some share of the incremental growth, but I think in India it is still 10 to 15 years away before the EVs can start destructing the incremental growth of the fossil fuels, because the demand of the country is, as per the projection, is quite robust, and the adoptability of the electrical vehicles, the availability of the electrical vehicles, the convenience factor, the charging infrastructure, the cost and economics of it, I think it is still some time before EV can start making a substantial dent in the growth of fossil fuels. Maybe it will be in some cities or metros or NCR region, it may take up a bit faster in two-wheeler and three-wheeler segments. But in the hinterland, I think it is some time to come. So I think that the demand for fossil fuels should continue for a reasonable period, at least 10 years, the way I see it, unless there is a substantial policy interventions which forces the people to move on. But in a country like India, it is going to be difficult.
Mr. Surana, thanks so much for joining us, and hope to touch base with you again soon. Crude at the moment, though, continuing at the 70+ levels. Thanks so much for joining us this morning.